So when Realex asked me to chair, my friends at Realex, I said I don't chair, I only organise events in payments. So I'm going to have to pretend I know something about payments. But they did twist my arm when they told me who was on the panel, because they're three of my favourite people, and if you don't know them, you really should get to know them because they know everything there is to know, and they advise and on my Payments Forward network and speak as well. So we have a number of time constraints. So when I was told who was speaking, I said that's a really terrible choice because these three, it's going to be very hard to shut them up. So I have said that they've got 4 minutes, 5 minutes. I am going to put a timer on them, and then I might have to just get really harsh. So, and I'm really not over-exaggerating, because we want to leave a little bit of time towards the end for you guys to ask questions and challenge what they've said. So the topic is, the question is, are payments changing for the better? So when I saw this, I thought, well, this presupposes that payments have been bad and are in a dire way. So maybe that's something you can challenge on. I think more the question is, what are the opportunities moving forward and on the horizon from the point of view of the payment providers, the merchants, and of course the customers, most important. And where's the real innovation, and who are the losers and winners in this emerging ecosystem? So let's get on with introducing the panel. So you've got all our biogs on the back of your sheet, but I thought I'd write a few little poignant things about each of them. So Dave Birch, who is next to me, is a global ambassador, which means he trots the globe endlessly and speaks at lots of things and advises. For Consult Hyperion, he is a visionary, a blogger extraordinaire, and you have got a copy of his book, as he calls it, on his latest book on your tables. He's an author. I'm sure he'll tell you about his other book. And you absolutely must follow him on Twitter. It's very serious about that. He's got a very big following. There's lots of people following him. And it's extremely entertaining, even if it's not, because he doesn't always tweet about payments. It's quite funny. So do follow him. And I can predict that he will mention Apple Pay, identity, and Bitcoin in the first 30 seconds. Okay, then we've got Nadeem Shaikh here, who is the co-founder and MD at Anthemis Group, and behind his friendly and demure, understated demeanour, he's actually a real global thought leader, a huge supporter of developing and investing in digital financial services startups, and generally a disruptor in the payments industry and in the ecosystem. And then we have Adrian Cannon, who recently set up consultancy Witstock, but he is a true veteran in the payments industry. And he's seen it, done it, run it, both on the issuing, acquiring, payment networks, schemes. He knows all about the regulatory side of things as well and beyond. He also overran the last thing he spoke about for me. So let's get cracking. And over to Dave. I'll set the timer. You can go.
Okay, so given the debating topic, are payments changing for the better? I thought I would think better at what? So when I first came into payments, quite a long time ago to be honest, broadly speaking there were three sets of complaints from customers. The argument was payments were too slow, they were too expensive, and they were too opaque. And all new products had to kind of focus on attacking one of those things. And to be completely honest, not a great deal has happened across those axes until quite recently. You know, we were in quite a conservative industry where, to be honest, the major players were quite happy with the status quo. So the pace of change wasn't really that great. And in fact, I got it this morning when I was talking about Apple Pay. And people saying, you know, why are you going to muck about putting payments on mobile phones? Because cards work fine. Well, actually, cards work fine depending on who you are. They didn't work very well for me this morning when I can't use cards on the bus and I had to go to the ATM and get a £20 note, which turns out they don't take on the bus either. And my stupid app on my phone didn't work. And then people are telling me payments work fine. They don't particularly, but they were good enough for the incumbents to hold the status quo. So what's changing? Things are speeding up. I won't trespass on Adrian's time by talking about faster payment service, but I can now whisk money instantly to my sons any time of the day or night, and they call this progress. using Ping It and such like. So I mean, we are making some progress on speed. Does anybody here listen to Planet Money on national NPR Planet Money? Oh God! But do podcasts? Do they ring any bells at all with anybody? Yeah, they're very popular with the kids, I'm told. NPR Planet Money is one of the best podcasts out there. They had a fantastic episode a few weeks ago. A woman was round her friend's house. She'd forgotten to bring nappies with her for the baby. They ordered them on Amazon, and the nappies arrived at 11 o'clock the next morning. So she logged in and sent her friend the money for the nappies, and then went on National Public Radio to say, how come Amazon can get nappies to somebody's house anywhere in the continental United States in 7 hours, and it took 5 days for the money, which is entirely digital, to wend its way from one bank account to another. So we need to improve on that. I think in terms of expense, I'll mention Apple Pay again. People moan that payments are too expensive, the merchants are constantly complaining about the price and so on, and yet people will cheerfully hand over extra money to people, in this instance Apple, in the region of 15 to 25 basis points on the transaction if they deliver something of actual value. You know, we've spent a lot of time thinking about how to cut the cost of payments, possibly not quite enough time trying to think about how to add value to justify some of those costs. People will pay if you deliver them some actual value. You know, one of the reasons why the merchants bitch about the payment costs all the time is because they don't get anything with them, you know. So I think we can do better on that sort of thing. And finally, on the opacity, I think this is where we might see some change coming out of left field. So if you look at something like Bitcoin, for example, which I'm not for one moment suggesting will ever achieve mass market traction as a payments mechanism, it is nonetheless interesting that you have an open and distributed public ledger that everybody can access, because transparency might well be the next key attribute for the mass market. You know, people are very, first of all, I need to mark out some ground. I'm not talking about, you know, there's a difference between privacy and anonymity. You know, payment systems won't be anonymous. They'll be private. But nonetheless, this ability to put things onto a public ledger so that everybody can see what's going on, so that everybody can feel comfortable as to where the money is, and that to me seems a really, so, you know, I think we're dealing with the speed thing. I think we're dealing with the expense thing by looking at ways to add value. And if I had to pick the one that's coming out of the corner of my eye, I think I might point towards transparency as the place where the next lot of action is going to come.
That's pretty
good. Oh my God, that's amazing.
I was watching that out the corner of my eye too.
Okay. Nadeem.
Thank you.
It's okay, I can time 2 minutes in my head, but when we get on to 4, it's more problematic.
Sounds like a strange 4 minutes. So I've lived in the payments world for a long time, you know, with the first data, and the debate always seems to be this is good and that's bad. And I wanted to start with the example of an emerging market, Africa. I'm sitting on the board of a company called AFB. It happens to be one of our portfolio companies. It's a consumer finance business operating in Kenya and Ghana and Uganda. And you would think that everyone talks about mobile and hype and so on, that everyone is looking for a mobile solution. Actually, what they're doing is building a payments infrastructure, a card network. They are building acquiring systems, you know, on a different technology than we use here, because there's a high demand for cards in that market for revolving credit for certain kind of customers. They're also building you know, propositions for this SME merchant, which is account-based propositions, and then they are also building consumer propositions based on the mobile. So there's a lot of interaction between physical, digital, mobile distribution and stuff. And what they're really doing is, in this proposition, is kind of rethinking the cost structure of and the, you know, and how stuff is integrated and how it's wrapped and how it's displayed and what's the customer design look like, and from really with the intention of what it feel and simplifying it for the consumer, right? So so that's quite an important kind of thing as we talk about, well, this is credit cards are bad and, you know, this is good. So, you know, as we think about with an Anthemis and think about what does it mean to build, which is, you know, every startup has a vision. We start a vision of saying we want to create a 21st century financial institution And what does it look like? It looks like a bunch of startups that are doing some real innovation work and coming up with really disruptive models, really rethinking the stack, how they operate, what the cost of the transactions are, what cost of servicing are, how the consumer interacts, what products they provide inside, what is manufactured outside, how does the customer design look like, which is all great, but means nothing if it cannot be solved for scale. So we do a lot of work on the scale side with large institutions saying, how do you take this innovation, how do you take this idea and apply it to the 10 million customers that have the scale? So that's for us quite important. At the end of the day, it's the consumer. And what David said, what has changed for the consumer in all this hype we've had for a long, long time in the payments industry? And reality is nothing's really changed. Colin has heard me talk about the NFC, and I think it has been technology. And today's announcement where it says Apple will finally, they are going to do NFC, fantastic. 2.4% of the merchant base in the US has NFC. So we wait for the 97.6 merchants to catch up, and then it will be the best thing since sliced bread, right? So what has really changed? Nothing's really changed. What does the announcement mean from today for iPay or Apple Pay? It's interesting they call it Apple Pay as opposed to iPay. The same banks behind it, the same card institutions behind it, the same processor, my old company is behind it, and you're saying, okay, so what does that really do for the consumer? So interesting enough, the banks are now paying to play in the space that they used to own, right? And so the consumer we are completely non-believers in the double-sided market as a house thesis. Any business model comes in and says we need to build the consumer side, merchant side, we are not believers in that. So think about all the wallets that were, if you had sat down 12 months ago, everyone was talking about wallet this and wallet that. Everyone's coming on a wallet. Guess what? Most of them are shut down. Most of them are gone. Most of them are not in the market today because it's really, really hard to build a consumer side proposition and a merchant side proposition. So same thing happens to Apple today, right? The announcement, they have to go and convert every single Apple user. They have 800 million iTunes accounts. You can only use this if you have an Apple iPhone 6. No one has that today. By the time you launch it, everyone has to have NFC. You have to build a merchant base. You have to build a consumer base. How is that different from what Google is doing, what Square has done? There are lots of people out there. What's really changing is the wrapper that sits in front of these businesses, right? So at the end of the day, what Apple is doing is a wrapper in front of a traditional infrastructure. And that's really interesting that the customer design is being changed and being owned. But somehow what we need to think about is what is the real disruptive element behind it, right? So where we see some of this is going in terms of if you think of the car industry, where it was like 15 years ago, right? It was a very vertically integrated industry. People used to own steel mills all the way down to the distribution, customer agent. And today, the car industry is very different. They own customer design, they own the customer relationship, and they own the integration of the millions of parts and suppliers and thousands of suppliers that put the car together. But they own that interaction. So as an owner of a car, if my BMW doesn't work, and I go back to BMW, they are responsible for every piece of it, as opposed to saying, well, no, that bolt that you're complaining about that I gave from China, and that thing came from somewhere else, we're not really responsible. So I'm the one who went over. So the same thing I think will happen with the payments and banking infrastructures and so on, that they will become more the owner of that customer relationship and the customer design, and the manufacturing will be elsewhere, right? And what they will be doing is building an API around this to be able to handle the multitude of services that we want to perform in a way the customer wants to have it, in a very simplified way, and that's really going to be the real disruption. So in all this stuff, right, the thing that I think that is real disruption is the blockchain protocol which is underpinning some of the Bitcoin currency stuff. Ignore the currency stuff. That's noise. That's a hobby and so on. But we are really investing in the blockchain protocol, and I bet you if we spend 20 minutes in this crowd and talk, I could come up with 50 use cases from the top of my head where this is really applicable. And now there are really starting to be some players that are really rethinking this, and the implication and for the payments networks that we have of something like that coming in, and some of the use cases, it won't happen overnight. It will happen over the next 2, 5, 10 years, is game changing. So I think, is it moving? It's certainly moving in the right direction. It's moving in some direction. Progress is always there. You can point to bits and pieces, but it's not changing fast enough for the consumer or the merchant where it really matters.
Adrian.
Well, it's refreshing. Thank you, Nadeem, because normally I'm the one who trashes everything Apple's doing, so that's good news. But I wholeheartedly agree. I think a total act of hubris to say other organizations have failed to do this, but we're going to win. No, you're not. You're going to crash and burn on the same place everybody else does. That payments are a mass effect technology. Unless you gain ubiquity and mass effect, all you have is a huge marketing bill, lots of challenges selling your payment service to lots of people who don't really want it. And it really hasn't moved the game forward. But I was reflecting on what we mean by better and who for. It's absolutely the case that payments for banks have become less good, less profitable, certainly as regulators have moved in and all sorts of intermediaries have come in to take shares of the marketplace, the PSPs in the merchant acquiring space, for example. It has become harder for those who provide payment services to make money from them. For consumers, I agree with Nadeem. I don't think a great deal has changed. Perhaps the noble exception, and here I have a bias because I was interim managing director of Faster Payments. Faster Payments has changed the world and has certainly made consumers more able to manage their finances and to do things, but it's limited. It has its limitations. It seems to me that for merchants, little has really changed. And we often forget that the reason merchants tolerate the charges and fees, to Dave's point about the value that's added, is because they get paid. They don't do it for any other reason. They take these services on because they get settlement. And so we often see it from the wrong end of the stick. Yes, retail payment systems are about the consumer. We need the consumer on board. We need them wanting to use these things. But unless they get paid, unless the merchant gets paid, then there is no payment service. So we have to be careful not to miss out one big chunk of this whole thing, which is the settlement and clearing side, where that has to exist. And I think that's where, at the moment, payments haven't changed for the better or at all. Everything that people talk about as innovation is running on yesterday's rails. Think of PayPal. It's running on Visa and MasterCard's network, in essence. As Nadeem rightly says, what Apple have announced is another thin veneer on top of 30, 40, 50 years of investment in the card transaction processing industry. Nothing else. That's all they've done. So we have to be very careful that if we're expecting real change, for as long as we rely on the automated clearinghouses, the card schemes themselves, by the way, sit on top of the ACHs. So at the moment we have this onion growing out from the very traditional payment services with loads of layers, and every now and again someone adds a new layer and we get very excited. Oh, it's innovation. Yeah, but it's not going to change the game because the underlying infrastructure is exactly the same. All the costs, all the regulations, all the controls. Bitcoin's exciting because it doesn't build on those layers, and that makes it very interesting. But unfortunately, for as long as we're there, for as long as we're building on that platform, then change for the better is going to be restricted. And of course, regulators, bless them, can't help but regulate. And everything new eventually gets regulated into a sterile facsimile of everything we've had before. Good job the regulator's not here this time. But we have to be careful. We have to be careful that we don't get carried away with what's possible in the context of highly regulated environments. I think we will see a change for the better when the payments industry realizes that what it does is often the last step in a very long value chain for other industries. And what the payments industry has failed to do in many instances is properly integrate with its customer base. So it produces general purpose payment systems designed to meet the needs of the clearing and settlement rules and the regulators, and then it says to customers, well, that's the choice, that's what you're going to use. What we need to start to see is payment services that are tailored for the business needs of organizations trying to service their customers. So for example, and it's often cited, the lack of information that travels with a faster payment transaction means that reconciliation is really hard. You have no idea where it's come from, what it was for, what invoice it links to. It just appears in your account. That's great. But you can't use it as a business service very easily. So payments will get better when we have that degree of integration with the lines of business and different industries that really make those payment services more effective for the payee. And I think the challenge then comes about when we consider choice for the customer, for the person paying, and choice is becoming increasingly restricted by other relationships that you have formed, by the bank that you're with, whether you have an iTunes account, And once you've made those choices, you become constrained. But the idea of real choice at point of sale, the idea that payment systems can compete for my business at point of sale, or whether I'm paying an invoice or transferring money, that I think is where we have to focus on how we can deliver that choice. And unfortunately, in a highly regulated environment, it's extremely hard to do, because if you haven't signed up for the service, if you haven't done the KYC, if you haven't done the AML, your choice is use an existing payment service you were already signed up for, or go through this horrendous process. What are you going to do? Well, I'll stick with the stuff I've been using for years. So my thoughts would be we need to look at different infrastructures to deliver more integrated, more effective business processes around payments, and we need to consider consumer choice, and then things will be getting better.
Thank you. So is it worth us doing anything in the light of, I mean, is
Well, we
it
could have a
worth
drink. I think it's probably time for that, isn't it?
is it, I mean, if things will never, if the shift will never really happen, because you're never going to get the critical mass either from the consumer or the merchant, any of you, is it worth really bothering and investing all this time in innovation?
Yes, sorry. Do you want to go?
Nadeem.
I think we're obsessed with this having to change what exists. What exists works, right? My credit card works. My cash works. Yeah, I know we want to get rid of cash. I know we want to get rid of credit cards. We want to get rid of net schemes. And it works. In some places where it doesn't work, I'll supplement it with my mobile. But asking me to take my mobile out and figure out which card I want to select from there, and having all these things, and then why? You know, everyone talks about NFC and how fantastic it is when you go to Starbucks. You know, okay, I do the payment, it's 1.2 seconds faster. I still have to wait for 15 minutes for my coffee until they deliver it. You know, give me a break, right? So we are kind of obsessed with somehow what we have today is horrible, right? And yes, there are things about it that may be good, that may be bad, but that's why I would use the example of the African example. Actually, there are places for some of this infrastructure where it works, and now let's supplement it with what we need to add, as opposed to this whole idea that somehow we have to replace everything. You know, and only when we replace and we reach the nirvana is focus on the mechanics, as opposed to what you're talking about. Is really, this is about embedding the experience for a consumer, right? What it makes us better for a consumer. I am not buying a mortgage, I'm buying a house. I'm not buying a loan, I'm buying a car. And so those are mechanisms for doing those, acting on getting the money across. So the better you can make it, the faster you can make it, the more integrated you can make it, superb. But at the end of the day, make my experience of doing that better, make it simpler for me to figure out where my payments are going. The example you said about the lady calling up and saying who sent it. It's a pretty important thing. We did the work in Middle East around money transfers, right? And where there are people sending money to third world countries and people traveling from villages and so on, and having to come into town to get the amount of money, not knowing if the money has arrived, waiting for a day at end, right? Because it's costs a lot to go back and forth. And just so simple invention, simple idea of saying we'll send you an SMS message to say your money has arrived, was the big revolution that changed lots of people's lives, right? They now know the money's there, I can go. And as soon as I show up, certainty I'll get it. Simple thing, right? So it's about simple steps sometimes, which can make radical differences, as opposed to trying to rethink this whole landscape as if, it's become obsession almost.
So do you think too many people are too many payment providers are jumping on the bandwagon, particularly the incumbents, and rather than really rethinking?
Right. So the bandwagon with wallets, and now it's and then before that was NFC. Now it's like iPay and Amazon and Facebook. They're coming to payments and transform. At the end of the day, nothing really changed. The banks still own it, right? They are the only ones that have the banking license to do anything. And then until that changes, and so until the real change is going to be when you change the infrastructure behind, which may be the blockchain stuff, right? But there's an obsession in the industry over just every trend is like we have to get on the bandwagon somehow. I don't know. You may disagree.
Well, I think there's more vulnerability in certainly for our clients, because you said in passing, they own the relationship with the customer. That's the crucial thing. But of course, in this impending new order, they don't. It's Apple that knows who I am. It's Apple that knows where I am. It's Apple that knows that it's my finger on the fingerprint. And I think in the same way that banks...
But in this Apple Pay, they are claiming that they will have no idea who's made the payment, how's made the payment. The only people that have the details, according to the claim, is the banks or their card schemes, right?
Well, the banks don't know what you've bought either.
No,
So
the minute-
That's one of Google's
So
big
it's not
plays.
that Apple is taking that data, right? So the thought process of it says Apple will take the data, but actually
No,
they
but
can't.
the reason I was using that as the example was to illustrate the point that there's this layer growing. There's Apple, Google, Facebook, Amazon. There's this layer growing between the financial services providers and the clients. And on the one hand, you could say, well, look, being a pipe, essentially, to those people, it could be a large-scale, very efficient, very profitable. I mean, Thames Water is a pipe. They make a ton of money. You can be a pipe. That's a very... But being a pipe, when that's your business strategy, is a fantastic idea. Being a pipe because you've been made to do it by other people, that's a different...
Yeah.
So I agree with you about how we need more change in the underlying, but you can see this layer emerging. And I think what our... Facebook already has its payment institution license in Ireland. It would take Apple 5 minutes to get a payment institution license. A person of a more sinister and Machiavellian bent, which I'm not one, might suggest once Apple has 500 million customers, then you'll just get a thing on your iPhone that says, oh, by the way, do you mind if we just take the money straight from your bank account? There's no need to bother Visa and MasterCard and all these people about this kind of thing. We'll just make it nice and...
So they're changing the rails.
Well, because I don't see it as I know you're going to annoy me, but I don't see it as a payments play. It's an identity play.
Oh, here we go. That was the third thing.
Payments is the thing that the authentication is being used for now.
Yeah.
But in a year's time, it'll be when you click to buy something on the internet, a little thing will pop up on your iPhone, and that's great. It's a great solution. And then it'll be when you want to log into something, and then it'll, you know what I mean? It's that layer is growing, and I think that's really where more this sort of disconnection is coming from, because it's once that layer's in place, then those people can turn around and say, you know what, I don't think we're going to use you guys anymore. 25 basis points just isn't enough. We'd prefer to keep all of it.
Yeah.
So we'll just sit on top of faster payment or whatever other immediate, or we'll just create our own accounts. I mean, how much would it cost Apple to get an electronic money license in the European Union? It's like 50,000 euros or something. It's trivial.
But Dave, Adrian made a point to me earlier before we came on, saying the market share isn't going to grow.
He's never even seen an iPhone. Don't listen to him.
The market share.
He's
will
only
never
had them
be
described to him.
because
In-
we're
in
not
fairness-
sheep, he and I.
In fairness, I once had an iPhone. I made the fatal mistake of trying to cancel my iTunes account, and it's the most extraordinary process. Once you are a member of the Borg, God help you, because you will not escape. And they wrote to me as if I'd gone mad. Are you planning to cancel? No, I've cancelled it. What? Anyway, I think I'm a bit of a Luddite. That's absolutely true. But when I look at this, I think, yes, it's possible that if they're thinking that what we'll do is we'll take 500 million people and we will be the pipe and we'll cut Visa and MasterCard out, what they've got to accept is that Visa and MasterCard provide value in that proposition to their customers in terms of the promise made to merchants for settlement, which is something Apple will have to stand up for, the fraud and the risk associated with payments, because there are no fraud and risk-free payment systems. And whilst I can see that they might see that there is revenue in that pipe and owning that pipe, there's also real cost and things they don't understand. And the moment they have 500 million customers, the regulator will start looking at them very differently. And they will start saying, well, it is an e-money license now, but maybe you're turning into a bank. Maybe we need a full banking license out of you.
The regulator is handing it to them on a plate. The regulator right now...
Why? Because nobody else can really make this shift?
because the European Commission, in its deranged hatred of Visa and MasterCard, is about to push through a whole set of regulations for regulated third-party access to bank accounts. Because they think... And the first thing that's going to happen, as soon as regulated third parties can have direct access to bank accounts, is that Facebook, Apple, Google and Amazon will become regulated third parties and have direct access to bank accounts. And instead of the horrible Visa MasterCard duopoly that the Commission's got its bee in its bonnet about, you'll have, Facebook and Apple and Google instead. So the regulators are actually driving it into these
I agree
guys,
they've opened a door, but it doesn't I had a lovely conversation with a German banker on this subject, and he said, yes, but we can charge for access to a bank account. The regulator is not saying that it's free, and if the regulator does that, the banks will start saying, well, that's fine. We will start running bank accounts, but they must be commercial operations. We will start charging. We'll be in the press saying it's not our fault, guys. We've already heard the banks in this country making noises about charging for bank accounts, current accounts. That'll come in really fast. And then if Apple are sitting there thinking that they'll just be able to do that, I think they'll find themselves in a strange position where they pick up the mantle of providing free banking, which is the thing that UK banks are desperately trying to get rid of. So I agree they've opened the door. I'm not sure it's a door they would want to go through, but they might do it.
But the debate is still in the, we're still debating about who provides the infrastructure. So it's Visa, MasterCard, in India is RuPay, in Russia they're coming out with their own scheme. Who cares, right? If it's Apple or Amazon, the underlying consumer, how is the consumer experience with Apple Pay changed? Tell me. What is different from a consumer's perspective? If I could use it in my merchants, and I could be globally accepted, what's different in the existing proposition today? What's different today? What's changed for the consumer?
Well, it would have meant that I could get on the bus this morning, which I couldn't do with the
if you had a proper bus pass.
If I had my phone, I would have been fine. Well, perhaps I'll borrow your bus pass next time.
Yeah, you could use my you could use my weekly travel card and it gets me everywhere.
All I'm saying is, if you look at what's bubbling under the surface, I don't think things are as stable as I mean, I agree with a lot of your point. And what I'm just saying is, the regulator is nudging in this direction, which says more openness at that level. They will undoubtedly, yes, the banks will be able to charge. They'll have to be open, transparent, and non-discriminatory, and blah blah blah, and all that sort of thing. And then once those charges are more than a fraction of a penny, Apple will just set up their own prepaid accounts, and that will be the end of it. And actually, if you look at what's happening in some countries, actually, if you look at Amex Bluebird in the US, that's a very good example of that kind of thing. It turns out, actually, even in developed markets, there are a great many people who don't actually want or need bank accounts. They just need payment accounts, just somewhere where they can get their money, and so you can have low-cost players coming into that space and offering, effectively a prepaid card with some bells and whistles on it. That's good enough for an awful lot of people. The Commission's got this other bonkers thing at the moment about they're going to regulate that everybody in Europe has to have a basic bank account, which is just if you're a bank, this is a nightmare problem. They're going to make you offer a money-losing service to people who don't want it. This is the that would be a lose-lose at business school, right? I didn't go, but you must have heard about this kind of thing. So there's all this mental stuff that's going on that's going to load stupid costs onto banks. So the idea that the payments bit will kind of start to pull away from banking, I don't think that's so crazy. I think you can see banks being forced to focus on core businesses around savings and borrowing, and you can see payments just beginning to peel away from it. And I don't think that's a bad thing.
So we often talk about payments being just becoming a utility and paring down to its absolute base, but there's also that whole thing about data, which I'm sure the banks still want to have a play in that. So if you've got all these other third parties, the Amazons and the Facebooks, taking that sort of the lion's share of that, is there a place for banks to play in the data space?
The banks have all the data right now. They do naffle with it.
Yeah.
I get a phone call, I'm not making this up, real example. A couple of weeks ago, I get a phone call from our gardener saying, I just checked the invoices, you didn't pay me in April. And I'm really sorry, because I pay with faster payment service every month.
Good.
So I go, I'll just quickly log on and check my bank account, just see if I can. So I log onto my bank account from one of a major high street bank, and I can't access any online transactions that are more than 60 days old. If I want to see who I paid in May, this is now. I'm not telling you some ancient story of how it used to be in the 1960s. This is now. In order to find out whether I'd paid the gardener in May, I had to download PDF versions of my statements from 3 months ago and then search through them manually. The banks have got all the data. They've done naffle with it. They deserve to lose it. Other people can do better.
I would just say that I think that data mining is deeply overrated, and people will come to look on it as something that was terribly exciting, a bit like CRM. Let's have massive, great big, and they'll wonder what the hell people were talking about. There's loads of data. I mean, Tesco's have proven this. There's loads of data that retailers can lay their hands on, and they can't extract that much value from it. It's too expensive, and actually it's not good enough to target and change behavior. So, yeah, there's loads of data, but so what?
But Facebook, there was an infographic that was doing the rounds on Twitter a couple of weeks ago about the Facebook advert. So when you look at a Facebook page on your mobile phone, the adverts that come up on those are auctioned. And so basically, when your device requests a page, Facebook say, okay, well, here's this broad demographic in this location. Who wants the ad? Right, and then the advertising companies bid for it, and then the winning ad is inserted into the page, and it comes up. That happens in 30 milliseconds, right? Why is payments any different? It's exactly the same thing. You walk into the shop and pay, and Apple will just auction that to whoever wants to bid to handle that payment. And if you can't do it in 30 milliseconds and for 0.001 pence, you might as well give up. Stick to something like banking, which is more profitable.
Okay.
And I think that is a possibility, but I still come back to, so what? Apple will benefit from that. The consumer won't, particularly. And the merchant certainly won't, because they're going to now be charged a premium for receiving settlement, as opposed to what they could get from their bank via faster payments for a fraction of the price. So
I think
someone will have to pay for it, right?
Yeah, someone pays for all that.
And the end of it will be the consumer.
I think the merchants would incentivize. I think the merchants will heavily incentivize you to use payments like that, because they'll have higher conversion rates.
I think if you're buying a forced purchase like petrol, if you're buying anything other than something trivial, I don't see that that's going to work. I just don't see that that's going to drive in that direction.
But you already have that in the States. You already have national, NPS, National Payment Services. There's that company in the States where when you fill up with gas, you swipe your driving license and they just take it as an ACH transaction. And the gas stations heavily incentivize customers to use that.
Yeah,
instead
but
of
you
using
don't need
conventional.
Apple charging you 4% for the privilege.
No,
and so that is a
if
big
Apple
problem.
make it nice and easy for
Monetizing these
everybody.
things, I think, and that would be my comment on the last 20 years of the payments industry, 25, that technologists really got stuck in a little while ago. FPOS UK was probably the start of it, but maybe there were things before it. And there's always this enormous fascination with what technology can do to radically alter payments. But I've yet to see them really turn into strong, economically viable models that really generate stable revenues that allow you to develop. And it seems to me that there's lots of new technology being thrown at problems that are ill-conceived. And in terms of making payments better, I'm not convinced they do. They may make Apple's business better. They may add some value to the merchant, but I don't see them really changing or shifting anything in particular. And it seems to me that we can throw technology at these problems till we're blue in the face, but underlying it all is if you don't understand the business of the organization you're trying to help receive payment or make a payment, whether it's an individual or a corporate entity, then all you can do is throw technology at it. And we've seen that too much. We need to start getting some business understanding into this.
Okay, I'm going to, just because of time, thank you to everybody. Well done. I didn't really have to work very hard on that. Sorry we couldn't take more questions. Come on.